Hello and welcome to NJBIZ Conversations. I'm your host, Jeff Kanij. My guest today is Ira Robbins. He is the CEO of Valley Bank. Ira, welcome back.
Well, great to be here. Thank you so much for having me, Jeff. I appreciate
Oh,
it.
well, thanks for taking the time to do it. I appreciate you spending some time with us. It's been a while since we spoke, almost 5 years now. Back in when we last spoke, it was the depths of the pandemic, and a lot has changed since then, both in the economy and at Valley. And I want to talk about both of them. I want to start with the markets and the economy in general first, and get your assessment of. First of all, let's talk about a little bit about commercial lending and where that is now. I saw an interview that you did with CNBC a few months ago where you drew a distinction between C&I and real estate. C&I, if I remember correctly, you thought C&I was doing okay, real estate not so much. Am I characterizing your thoughts correctly? And if so, is that still the case?
I mean, at the time, absolutely. The commercial real estate market actually was really doing well in certain segments, and in other segments was probably a little bit challenged. I think those characteristics still probably hold true for the commercial real estate business. From a C&I perspective, obviously there's been a lot of volatility in the marketplace today as we talk about tariffs,
Hmm.
interest rates, and a lot of other things. And I think there's a little bit of uncertainty that's now impacted the C&I business as well.
Okay. Well, it's interesting you mentioned tariffs because that's I was going to talk about interest rates. The Fed, we're talking in late March. The Fed had a meeting this week, held rates steady, but Chairman Powell suggested that there was a lot of uncertainty in the economy, as you just mentioned, and it said warned that there was a possibility of both slower growth and higher inflation. What did you make of that? What do you take away from what the Fed did and what they said?
I think they were concerned about what they put forth in their interest rate forecast and what that was going to mean to the rest of the market. They spoke of concern about inflation. They spoke of
Right.
unemployment and what that was going to do, yet they still held their dot plots as you looked at the forward rate curve to be the exact same. So a little bit of inconsistency in what their forward expectations are with rates and what their qualitative conversation says. So I do believe at some point they're going to have to reconcile the two of that, which probably means an adjustment on what they're looking at with rates if there is some inflationary pressure that is coming.
Okay, I think if I remember correctly, they didn't back off the suggestion that there would be two more cuts this year,
Correct.
but it sounded like that's up in the air now. I mean, that must create some uncertainty too, yes?
I think if you listen to the qualitative comments, then absolutely it's up in air.
Okay,
If you just literally opened up and looked at the quantitative forecast that they have, then nothing's changed. Once again, I think there is a disconnect between what they're qualitatively saying and what they're quantitatively putting forth. There has to be a reconciliation of that at some point. I think qualitatively what they're saying is probably more in line with what their expectations are today. That said, I think President Trump is focused on lowering rates across the entire spectrum, whether it's short-term or long-term rates. And I do believe a lot of what he does is focused on making sure that rates do come down.
okay. And the stock market, other capital markets have been reacting to seemingly daily to what's going on. Again, that kind of uncertainty that must make it difficult for bankers in particular and your clients, yes?
I think the uncertainty in any market is challenging for a banker, is challenging for a business owner, is challenging for anyone listening to this today. People, when they make investments, they want certainty. Not
Mhm.
certainty as to what the outcome of the investment is going to
Right.
be, but certainty with regard to what the operating environment is around them. And that hasn't happened. We've had uncertainty with regard to COVID when I was here last 5 years ago.
Mhm.
Uncertainty with regard to interest rates in the last couple of years as to whether they were going up, down, what that was looking like. Now we have uncertainty as to what some of the presidential actions and executive orders are going to look like. It is very difficult for a business operator to sit there and make a capital investment today and say, I have certainty regarding what my external operating environment is going to look like.
Right.
That does create a challenge from a macro perspective as to whether you're going to borrow from a bank or whether you're going to put some of your own money into different projects.
Okay. And is that the main thing that's driving decisions right now? Is that kind of uncertain? I mean, after all, nobody can predict the future. There's a certain amount of a certain amount of uncertainty in every decision that you make. But it seems like this has a different feel to it. That folks really are concerned about what's coming. And is that the main thing that's sort of as people make decisions about spending, about investing, about borrowing, is that uncertainty the main driver right now? Or are there other factors that
I
are that
hate
are
to
that
say
are coming
yes
into
and no in the same answer, Jeff,
it?
so I
Okay.
apologize for that. But I in if you just isolate what's going on and saying, yes, is there uncertainty as a result of what's going on in the environment today with regard to what President Trump is putting forth and uncertainty as to what that future looks like? An absolute answer that says yes, that is a prohibitive factor that is impacting people's investments decisions. That said, the journey is always important to where you got to today. And as I mentioned earlier, we have been in an environment where people were so uncertain about interest rates and they thought they were coming down. There was a lack of investment for so many years because of where the interest rates were.
Right.
So what I'm seeing in my conversations with clients is they've been pent up demand for so long that even though there's uncertainty with regard to some of the executive orders and everything else that comes forth, at some point they have to invest in their own individual businesses. And I think that is still an issue for many of the borrowers that we see, for many of the entrepreneurs that we meet with, even though there's this uncertainty today that would in an isolated incident say, I'm not investing, I'm too concerned, because they haven't been able to invest for 2, 3 years now. And a couple of years prior to that, because of COVID, at some point
Right.
they have to invest back into their business. So I still see people going ahead and pushing forth, even though in an isolated environment, they would say, this is really significant and a real challenge to me.
Okay. Now, that was actually the next question I was going to ask you is what you're hearing from clients and customers, because it seemed as though just before the election and then just after, there was some optimism on the part of business owners and executives about what a pro-business, a more pro-business administration might bring, fewer regulations, less of a focus on antitrust, things like that. Are you still hearing? First of all, did you hear that same sort of thing? And second, are you still hearing that same sort of thing that may be something that tempers the uncertainty a little bit?
I think it is tempering it, Jeff. I think there is a benefit on one side that says some of the challenges with regard to getting regulatory approval is going to be a little bit streamlined. And from day one, when I initiate a project to when it gets approved or moves forward, it's going to be a little bit shorter of a timeline. So that is a positive, and that has real cost associated with it. I think the other thing that you're seeing is we talked about tariffs a bit earlier, and some of the conversations I'm having with borrowers are, does does that impact your decision, whether it be builders or whether it be other people looking at CapEx as to what they're looking at? To a degree, yes, but in a large part, labor is a bigger piece of what their business
Okay.
is. The
Mhm.
labor is really steady at this point right now.
Okay.
So the tariffs and the conversations I've had with borrowers are not dramatically impacting their decision as to whether they're going to do something or not do something.
Okay. Well, that's interesting that there's sort of those same sort of concerns are persisting even in this environment.
Yeah.
How about what can you tell us anything about consumer lending, cars, mortgages, things like that? How is that doing? What is that? What is there anything that we can learn about what consumers are thinking about? Because after all, consumers were the driver of a lot of the economic growth of the past couple of years. What are you seeing there? Is there anything you can tell us about that?
And it's a great question. Look, 70% of our GDP is a function of what goes on with consumer spending.
Right.
So it has a huge impact on what the overall GDP is, what the growth trajectory of the United States is. I would really say that you have a tale of two worlds when you look at consumer spending. When you look at those at the lower end from an economic perspective are really challenged, and we're seeing consumer spending slowing in those areas. We're seeing consumer debt in those areas increase as well. When you look at those that are on the other end of the spectrum that have higher financial wealth, they're still spending and there's still tremendous activity there. So you're seeing expansion still on the high end and a slowing on the long end. That overall, from a weighting perspective, definitely brings down some of what that consumer spending was, but there's still enough activity taking place that I do see GDP expansion.
Okay. And all that the next question then comes, what does this mean for the banking industry? It sounds like you're fairly confident and optimistic that the industry, let's talk about that in general first, and then we'll talk about Valley in a minute. The industry in general seems to be in pretty good shape, yes? Or I don't want to put words in your mouth. You tell me what you think of it.
Look, I think the industry is in tremendous shape. I think
Okay.
the balance sheets of banks have never been stronger. There's a tremendous amount of capital that have been in banks. There was a concern from COVID even until the commercial real estate crisis that there was a lot of losses coming in the banking industry and reserves were boosted, capitals were boosted. In reality, for most organizations, including Valley, those losses really never materialized. So we have very strong balance sheets and the ability to lend out. We do have a lowering of an interest rate environment versus where we were a
Right.
couple of years ago, which is a positive as well for us to make money and for borrowers to be taking money from us. So from a purely banking perspective, all of the banks across the entire country are in really good shape and have a real desire to lend right now. So accessing capital, I don't think is going to be a challenge for many companies today.
Okay. All right. Outside the banking industry, then the prospects for growth. Let's talk about first New Jersey, since we're sitting here, and then around the country. It sounds like what I hear you saying is that there are conditions are ripe for growth. I mean, you're expecting more growth, both in New Jersey, as I said, New Jersey, the region, and then the nation as a whole. Yes.
Absolutely. Like
Okay.
I do believe that we're growing. We are not expected to grow at the same pace. I think the GDP forecast is down to I
Right.
think 1.8% versus a little over 2% before. But
Okay.
still 1.8% is still hovering around 2 and within a margin of error. That's still economically strong from a growth perspective. And I think that is positive.
Okay. All right. So if we could, I'd like to talk a little bit about Valley itself. First of all, you back in January and late January, you released fourth quarter earnings. You seemed pleased with them, and you mentioned the disinversion of the yield curves. Again, that was something else you mentioned in the interview that I talked about before. That the inversion of the inverted yield curve has created problems for you, and not just Valley, but a lot of regional banks. Has that worked itself out now, or are you still dealing with the fallout of that? I mean, the inversion ended, I guess, back last summer, last fall, right? So that's gone. But are you still dealing with the fallout from that, or has that worked itself? All those problems worked themselves through the system?
It's still trending through. Look, from a banking perspective, and there's a structure to interest rates, right? Where a term structure that says as you go out longer, you expect a higher return on what your
Right.
investment should be. So interest rates on the long end should be higher than what interest rates are on the short end. To your point, Jeff, we're back in that environment today, which is a positive. We were in an inverted curve for a record long period of time. That's not good from an investor perspective. It's not good from an entrepreneur perspective, and it's absolutely not good from a bank perspective. However, to your point, it does take a little bit of time for that to continue to cycle through as we think about the
Okay.
cash flows, et cetera. So while we are seeing significant improvements in our net interest income and the margin based on that positive sloping yield curve, to get back to where we were is probably going to be another 6 to 12 months to continue to cycle through. But there is definitely an earnings tailwind when you look at Valley and you look at a lot of other banks today.
Okay, well that was the next question was what does it look like for Valley in particular over the next 12 months? It sounds like you still got some things to work through, but if the environment is as you say it is, you must be, I'm guessing, fairly confident about what things are going to look like as we go through the year.
Yeah, I think the tailwinds surrounding the banking industry are a positive, and that's going to impact Valley as well. From Valley specific, there are still around 5,000 banks left in the entire country.
Hmm.
There's a handful of banks that are really the large money center banks, the JP Morgans, the Wells, the Banks of America. There's only 10 banks in the entire country that look and feel like Valley, right? We are the 25th largest bank in the entire country today. So
Hmm.
there's an opportunity that continues for us to serve a certain segment of client that isn't served by the large money center banks.
Right.
But from a capacity perspective, isn't able to be served by a lot of the smaller banks across this country. So tremendous tailwind from a banking industry perspective. And I would say an even stronger push from the pure segment that we serve today as being the 25th largest bank in the entire country, that the prospects for us for 2025 and into 26 continue to be very, very strong.
Okay. And is that where growth is going to come from as far as you're concerned? That meeting the needs of those clients as opposed to say acquisitions or anything like that? Is that what you're looking at?
I think we're always open to different acquisitions. They have to
Okay.
serve a strategic purpose for us, but I would say largely most of our focus in 25 and 26 will largely be on the organic side. We are seeing tremendous opportunity today, even as there is uncertainty within the economic environment. There are enough clients that need an organization like Valley, and we're really optimistic about what that balance sheet prospect is for us.
Okay. And I was going to ask you then about your priorities for the rest of the year. That sounds like it, yes.
Organic growth, I think, is really where we need to focus. As I mentioned earlier, we're a certain size organization that for us to continue to grow, how we think about the organizational structure, the foundation of how we really leverage the bank continues to be challenged. Obviously, there's still different regulatory expectations for us as we continue to grow. So really creating that foundation that we can be here for another 100 years without ever having a losing quarter to be able to serve the clients and communities in which we serve.
Okay. Finally, before I let you go, I have to ask you, how's it going in Morristown? I drive past the building fairly regularly. It's just about 2 miles from where I'm sitting. Looks great. It's in a great spot. How do you like it?
I love it. You know, it was really an interesting process for us. It's something we started in 2018 as we looked at the ways of working shifting. And for us, it was really important to put our associates in a different physical environment that really supported what their growth was going to look like and how we really work today. So the layout of the building is much, much different than what we were when we were in Wayne. But obviously, a strong focus on maintaining our Jersey roots was really important to us. And doing it in a dynamic area like Morristown, I think, was great from a community perspective,
Mhm.
great from an employee and associate perspective as they really begin to use a lot of what the downtown Morristown area offers. So couldn't be more pleased and really excited to be here.
Okay, very good. We'll leave it there. Ira Robbins, CEO of Valley Bank, thanks for joining me today. I really appreciate you taking the time.
Thank you so much for having me. It's been great.
Okay, and thank you for watching. Until next time, stay safe, everyone.